All right, let's discuss define your edge. All right, from the last slide, you guys can see that define your edge is going to be one of the most important things you do, and it's day trading edge was not just some rando name. It's in there because it's probably the most important thing we're going to do. It's actually one of the things that the mentorship is designed to do is to help you define your edge. It's to help you build your edge. It's to help you implement your edge, right? And to keep your edge, to sharpen your edge, to make it even better. All right. So your edge is your actual strategy. It's what you're bringing to the table that's going to give you an advantage. All right. If I sit down with a bunch of poker players and we're all average, then we're just going to have some average game. But you take that same average game and you take one of those players and you teach them how to count cards and how to read their opponents extremely well, like when they're bluffing and when they're not, dude, like it's going to turn the game on its head. Okay. And that's really what we want to do. We want to turn this trading on its edge, right? Because most traders go through a boom and bust cycle. Like, I don't know about you, and I don't know if anybody else has been trading for a while. I've been through them, you know, and basically I would take 2 grand, make four, and then I would lose it. Okay. I would get a funded account, lose it. I would attempt a combine and I would do really well, and then I would lose it. And then I would fail a combine, right? So that cycle just kind of went over and over and over again until I sat down and spent the time to define my edge. And with developing an edge and your good trading psychology, that's how you break this cycle. That's how you bust out of this cycle and start to become profitable. All right. So examples for developing a trade plan for your edge is like your daily bias matches. You're sweeping a main liquidity level, and then you also have like you're inside a macro or you're sweeping time-based liquidity. You have displacement. You have fair value gaps, breaker blocks, SMTs, and all of that points in the same direction. Okay. Now you're starting to define your edge to up all of your probability. That same poker player who can, count cards is awesome, but the same poker player who can count cards and read his opponents extremely well, now it's just like adding confluences, right? So that's what we're going to be doing. All right. So one thing I want to do and that we're going to be doing in the future is we're going to define your edge. Okay. That's what this mentorship's about. That's what this Discord is. We can talk about your edge. We can discuss your edge. We can help you build your edge. And then we can help you like implement your edge. Okay. So you're going to need back testing, the forward testing on paper. When you trade your edge, let's see what the data looks like. When you attempt to trade your edge, but then you trade emotionally, we need to remove those numbers. Okay. So, and we talked a lot about that in the last video as well. Um, so what I want to do is I actually want to take just a quick second. I want to go over some of my trades and I kind of want to like, play this out, like how I define my edge, right? Okay. So here we are looking at the market and this purple box over here, this is London session. Okay. So I wake up, I'm having coffee, my breakfast, I'm like, oh, look at this, morning macro opened. And don't worry, like a lot of this language, we're going to go over all this stuff. I just want you to get the gist of my edge, right? We swept, we did a sweep on London high. So boom, we swept a time-based liquidity. We got displacement down. So now in my mind, we're looking to be bearish, okay? And also matched my daily bias. So we came back up to this fair value gap that was created, and I entered a trade. Simple 2-to-1. I put the stop loss above this candle high because this was the candle that started to create the fair value gap. And so this is where I entered. It came down, took profits 2-to-1. Boom, right? I was happy with that. All right. So next, this is another trade I took. So we came over here. We took London highs. We came up. I started to watch this. Excuse me, displacement. I'm still getting over strep throat. This displacement here, but we really didn't like do what I was looking for. We came up, and then later on in that day, we had displacements here. We had displacements here. So now we're finally starting to move down. So I came in here and took a short pretty much at this fair value gap that was created right here. All right, during a macro. So I had multiple confluences in this area. So during the macro, we came up. I was in drawdown just for a little bit, and then it pushed real hard. Now I was watching these lows down here for my take profits, right? So boom, I take profit one. I went ahead and moved stop to entry just in case, right? What if I was wrong and this was the only move and we were going to pump higher to clear all these highs up here? Well, I would have been in profit anyway. So we came down, we swept that, right? And then we came down and we came here. I took profit here. This was further back on the chart, but this was another area of lows, so I wanted to take profit. And then also the TP3 you see down here was actually pretty far, and that was like a 3-to-1 trade. Usually, if I'm hitting a 3-to-1, I mean, I almost don't even have to hit a liquidity point or anything. I'll just take profit because if I'm going to risk $650 to make 1835, I mean, I'll do that all day long. Okay, I really try to focus on my greed, and I don't try to go for a $650 risk for a $6,000 gain. I mean, yeah, that's great, and you know what, it does happen sometimes, but for the most part, I'll close when I start hitting these kind of numbers. Okay, so let's look at one more. All right, so we took London lows here. So I actually was looking for a retracement, and I really felt like we were going to run the London highs. Okay, I ended up, being right and wrong at the same time. But we took the London lows, and we came down. Now we had this displacement I was watching, but as soon as we broke and like displaced down here, it made me think twice. All right, so I did grab a little scalp right here. And this was just a little scalp. The lower time frames looked good. We were respecting bearish order flow. So it was a small scalp, 2-to-1 I took, boom, right? We had a little bit of a retracement. This trade I took, we pumped. I moved my stop to entry and I got knocked out on this wick. And I wasn't going to enter back in, but when we came down, this swept these lows. So then I became interested. And as soon as we pushed up, I went ahead and entered back in. All right. And then once we came up here, TP1, TP2, which TP1 was this right here, this liquidity zone, this high right here. And then right here, because this was just a good spot in my opinion to take it. So I went ahead and took some there. And then I took some at the top here. I could have held longer, for these highs and then even these highs. But I mean, yet again, I was more than happy with this right there. All right. So that was just like how I have my edge. I look for time-based liquidity swept. I look for fair value gaps to start entering trades. I wait for displacement to start playing a role before I get involved. So there's just little things that I do. And yes, some of them are interchangeable. But what I like about this is you can build mechanical strategies that you can trust and believe in. All right. And that's what we're going to be doing. All right. As we go over all this. So just remember, like, take the finding your edge, extremely serious, and start taking notes and start building your edge, start building your business plan, start writing it down, and we can talk about it in the Discord, and we will help you guys. We will get this edge sharpened, and you will be sitting at the table with, an actual advantage, and that's what we're looking to do. So, all right, on to the next.